Hello, welcome to all for the second class of third week. In this class, we will detailedly discuss on to give knowledge about the indirect tax structure existed before the implementation of GST in India. Indirect tax structure before the implementation of GST. The indirect tax structure existed in India before the implementation of GST is shown in the following manner. Number one, that is indirect tax. Indirect tax is a tax which is collected by the retailer who is an intermediary from the customers who is ultimately liable for making the payment of tax. This tax forms the major source of tax revenue to the government than to the direct tax. The structure of the tax is comprised of both the taxes which were levied by both central and state governments. The central tax or the tax which are levied by the central government, such as customs duty, excise duty, central sales tax and service tax, etc. Let us see the customs duty. It is a duty levied on the exports and imports as per the Indian Customs Act 1962. Customs duty majorly focuses on imports than exports to safeguard the domestic country and the business people as well. Basic duty. This duty is levied on the value of imported goods under the Customs Act 1962. Additional duty, that is countervailing duty, also known as CVD. This is levied under section 3 subsection 1 of the Customs Tariff Act and is equal to excise duty levied on like a product manufactured or produced in India. If like product is not manufactured or produced in India, the excise duty that would be leviable on that product had it been manufactured or produced in India is the duty payable. If the product is leviable at different rates, the highest rate among those rates in the rate applicable, such duty is leviable on the value of goods plus the basic custom duty payable. Additional duty to compensate duty on inputs used by Indian manufacturers. This is levied under section 3 subsection 3 of the Customs Act. Anti-dumping duty. Sometimes foreign sellers may export into India goods at prices below the amount charged by them in their domestic markets in order to capture Indian market to the determinant of Indian industry. This is known as dumping. In order to prevent dumping, the central government may levy additional duty equal to the margin of dumping on such articles. However, certain restrictions on imposing dumping duties in case of countries which are signatories to the GATT or on countries given most favored nation status under agreement. Protective duty. If the tariff commission set up by law recommends that in order to protect the interest of Indian industry, the central government may levy protective anti-dumping duties at the rate recommended on specified goods. Duty on 73 bounty fed articles. In this case, a foreign country subsidize its exporters for exporting goods to India. The central government may impose the additional import duty equal to the amount of such subsidy or bounty. If the amount of subsidy or bounty cannot be clearly determined immediately, additional duty may be collected on a provisional basis and after final determination. The difference may be collected or refunded as the case may be. Export duty. Such duty is levied on the export of goods. At present, very few articles such as skins and leather are subject to export duty. The main purpose of this duty is to restrict exports of certain goods. Cess on export. Under subsection 1 of section 3 of the Agricultural and Processed Food Products Export Cess Act 1985, 3 of 1986, that is 0.5% ad valorem as the rate of duty of customs be levied and collected as cess on export of all scheduled products. National Calamity Contingent Duty. This duty was imposed under section 134 of the Finance Act 2003 on imported petroleum crude oil. This tax was also leviable on motor cars, imported multi-utility vehicles, two-wheelers and mobile phones. Education cess. Education cess is leviable at 2% of the aggregate of duties of customs, except to safeguard duty under section 88 and 8C, CVD under section 9 and anti-dumping duty under section 9A of the Customs Tariff Act 1985. Items attracting customs duty at bond rates under international commitments are exempted from this causes. Secondary and higher education cess, leviable at 1% of the aggregate of duties of customs. Road cess, additional duty of customs on motor spirit is leviable and additional duty of customs on high speed diesel oil is leviable at the Finance Act 1998 and the Finance Act 1999 respectively. Surcharge on motor spirit, specially additional duty of customs on motor spirit is leviable by the Finance Act 2002. Central excise duty. The central government levies excise duty under the Central Excise Act 1944 and the Central Excise Tariff Act 1985. Central excise duty is a tax which is charged on such excisable goods that are manufactured in India and are meant for domestic consumption. The term excisable goods means the goods which are specified in the first schedule and the second schedule to the Central Excise Tariff Act 1985. It is mandatory to pay central excise duty payable on the goods manufactured unless exempted. For example, duty is not payable on the goods exported out of India. Further, various other exemptions are also notified by the government from the payment of duty by the manufacturer various central excise, namely basis excise duty. Excise duty imposed under section 3 of the Central Excises and Salt Act of 1944 on all excisable goods other than salt produced or manufactured in India at the rates set forth in the schedule to the Central Excise Tariff Act 1985 falls under the category of basic excise duty in India. Special excise duty. According to section 37 of the Finance Act 1978, special excise duty is levied on all excisable goods that come under taxation in line with the basic excise duty under the Central Excise and Salt Act of 1944. Therefore, each year the Finance Act spells out that whether the special excise duty shall or shall not be charged and eventually collected during the relevant financial year. Additional duty of excise. Section 3 of the Additional Duties of Excise Act of 1957 permits the charge and the collection of excise duty in respect of the goods as listed in the schedule of this act. Road cess. Additional duty of excise on motor spirit. This is leviable by Finance Act 1998. Additional duty on excise on high speed diesel oil. This is leviable by the Finance Act 1999. Surcharge. Special additional duty of excise on motor spirit. This is leviable by the Finance Act 2002. Surcharge on pan masala and tobacco products. This additional duty of excise has been imposed on cigarettes, pan masala and certain specified tobacco products at specified rates in the budget 2005 and 6. Buyers are not subjected to this levy. National Calamity Contingent Duty, in short form we can say that NCCD, was levied on pan masala and certain specified tobacco products vide the Finance Act 2001. The Finance Act 2003 extended this levy to polyester filament yarn, motor car, two-wheeler and multi-utility vehicle and crude petroleum oil. Education cess. Education cess is leviable at 2% of the aggregate of the duties of excise and secondary, and higher education cess is leviable at 1% of the aggregate of the duties of excise. Cess. A cess has been imposed on the certain products. Next we will come to the topic on service tax. The service tax providers in India except those in the state of Jammu and Kashmir are required to pay a service tax under the provisions of the Finance Act of 1994. The provisions related to service tax came into existence 1st July 1994. Under section 67 of this act, the service tax is levied on the gross or aggregate amount charged by the service provider of the receiver. However, in terms of Rule 6 of Service Tax Rules 1994, the tax is permitted to the paid on the value received. The interesting thing about service tax in India is that the government depends heavily on the voluntary compliance of the service providers for the collecting service tax in India. This class summary. I hope in the second class students were received detailed knowledge in relation to the composition of indirect taxation system in India. Further, it helped the student to differentiate among the state and central taxes. The central taxes were excise duty, customs duty, central state tax, state taxes or the state sales tax, that is VAT, value added tax. Thank you.